Welcome back, investors, to the Investing with Our YouTube channel for another video. If you're new to the channel, I am a UK-based investor focusing mainly on US stocks, and I started the portfolio I will be showing you today in April 2021. I am fortunate enough to have gone past the golden milestone having a 100k portfolio, and I'll be showing you the ups and possibly more importantly the downs of my investing journey. This includes the buys, the sales, and the dividend income I receive. So if you're a returning viewer, smash that like button. If you're new to the channel, subscribe so you can follow my journey. Now, let's get into it. Today's video is going to be focusing on the third week of August. So at the end of last week, we were at 119,644 and we ended this week at 120,108 for a 0.3% gain, which equates to £464. So a good week overall. But during the middle of the week, we were down as low as just under £3,000. And that was because the market thought that there was a reduced chance of a rate cut in September. So the market started selling off and there was a lot of red in the market and a lot of people got worried. Now, I want to talk about why it's important not to panic in situations like this. And if you can, this is a time where you should be adding to your stock that you believe in. Unless the fundamentals of a company itself has changed, then these kind of scenarios and occurrences give the opportunity where you can buy your stocks at a lower price. And I want to show you a history of crashes. I mean, this wasn't a crash because it recovered by the end of the week, but I want to show you what happens during what we call bear markets, which is when markets are down. Now, here is a historic graph of the stock market. Now, as you can see, there have been many large dips. But what you can also see is that the market has recovered every single time. It's just a case of how long it takes. Now, some of the big ones are the Great Depression, where it went from here to here. The post-war bear market, the Watergate scandal here. Black Monday, the Wall Street crash in 1987. The dot-com bubble in 2008. And more recently, the pandemic. But as you can see, it's recovered every single time. Now, especially if you bought right at the bottom, which is hard to time, but if you bought anywhere during the drop phases, if you just wait long enough, you would have seen a recovery of your money. And this is where major wealth is created. Now, this is a graph of the most recent times and how long you potentially have to wait. So this is a dot-com bubble where you had to wait 4.5 years for recovery. The global financial crisis when the housing market collapsed, 4.25 years. More recently, the pandemic where you had to wait 1 year and 10 months. But if you bought anywhere near here or there or there or even there, like it doesn't have to be at the bottom, but when markets are going down, if you dollar cost average and you add, then you historically always will do well. And this is what happened with last week, actually. So down almost 3,000 and recovering to a profit at the end. And what was the main reason for that recovery? Well, it was the speech made by Jerome Powell at Jackson Hole, which is an annual symposium where they talk about monetary policy. And he said the following things which made the market really happy. And he said, our policy rate is now 100 basis points closer to neutral than it was a year ago. And the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. And this is the key thing, the changes to our policy stance. So what happened this year is that the Fed did not cut at all. So no rate cuts this year. But now what Powell is saying is that now they're going to consider a change in that. Now, Powell has been pressurized into cutting rates, but he hasn't done so since. But although he's not saying explicitly because he can't, but it's going that way where the likelihood of a rate cut is now close to 100%. And this is what the market did after that, and it recovered really strongly. Now, why are rate cuts important to investors like us who hold stocks? Now, the main one is it lowers borrowing costs. So it reduces the cost of money for businesses, which they can then use to invest, buy companies, just to grow their business overall. It also reduces the discount rate. So stock prices are the present value of expected future cash flows. So lower interest rates reduce the discount rate used in these models. So you can expect future earnings to at least appear more valuable today due to the lower cost of borrowing. Shifts investor preference. So if rates are lower, then things like treasuries and bonds become less valuable because you get a lower interest rate for holding them. So if, for example, the current rate is 4.25%, if that goes down to 4%, then you get less money and that bond becomes less attractive. So what people tend to do is then look at equities because that gives you the opportunity to get a bigger return on your money. It also can tend to boost consumer spending. So lower rates make mortgages, credit cards, and auto loans cheaper, and also the likelihood of people spending more. And when people do spend more, it usually ends up in the hands of companies, which increases revenues and earnings as well. And finally, it improves sentiment and risk. So rate cuts are often seen as the Fed supporting markets or preventing a downturn, which gives people confidence to put more money into equities. Now, it's not all positive. The one major concern right now is during rate cuts in a high inflation environment is that if people are not incentivized to save, they usually spend their money. And when you spend money, it makes prices of goods generally go up, which increases the chance of inflation, which is a big problem. So here are some more risks. So it can create asset bubbles. So risks of inflated stock, housing, or crypto valuations. Debt buildup. So when interest rates are cheaper, then people tend to borrow more and then they spend more. So sometimes, not so much with a 25 basis point cut, which is what people are expecting. But when there's cheap money out there, then there are companies just borrowing and just investing anything because it's so risk-free to get low interest. There have been periods in the US recently as well where interest rates were 1% or even 0% to improve economic output. Banks, not a major fan of banks, but yeah, they have narrow margins, which hurts their profitability, but I think they make enough anyway. And things like currency volatility. But the main one is inflation, really. That's the main risk of lower rates. So if you've enjoyed the content so far, then please, if you can, give it a quick like, hit the bell icon so you get notified when I upload a new video. And if you want to see how my portfolio evolves, then please subscribe so you can follow the journey. So that's what happened. And in the end, generally my companies did well. If you look at the heat map for the last day, so Friday, pretty much everything is green, especially Carnival Cruises actually. I can't stress how important this was for equity shareholders like us. If Powell did not announce rate cuts, then the red you saw here, it would have been far worse. And also the future outlook would have been far worse. So this is really bullish for the market. And I expect the market to continue to go up, at least until the rate cuts happen. And then we will see what future plans there are. If there are further rate cuts, the market will continue to go up. But there will be some level of pullback because the S&P 500 is at the highest rate it's been. It's pretty much at record levels. So there will be some form of pullback. And as you saw from the graphs I showed you about stock market crashes and subsequent pullbacks, I'm going to be continuing investing. And if you can too, you should be investing because this is where the real money is being made, where you get sharp drops and you buy at the bottom or close to the bottom. And when the market recovers, then you start doing really well. So as you can see, overall for the month now, I'm up just under £4,000. And overall, since I started this account in April 2021, I'm up just over £28,000. So really, really happy with the returns at the moment. So last week, one of the key things for me was Google hitting an all-time high. So it went up just before market close at just under $208 and settling at $206.72. It spent a period under 200 as well, which it then recovered. And so this is really bullish. And this is my biggest holding. So really, really happy to see that getting close to the 20% mark. I've spent ages being down on this, and now this is recovering. In terms of the other stocks that did well last week, so we got in at number 5, Imperial Brands, up 2.39%. Remember, a lot of these companies would have been higher, but there was a market sell-off, and this meant that the gains aren't as big as it could be, but this one had a decent week. MasterCard, up 2.98%. Went past the $600 mark, wasn't able to hold, and settled at $599. Tesla had a good week, up 3.28%, and settling at $341 per share, and I'm a holder of 21.9 shares. Carnival Cruises, up 3.55%, settling at just under £21 a share. The strongest performer in my entire portfolio, up 119.75% for a £3,430 gain. And the best performer of the week was Oscar Health. So continuing to ride the wave of Warren Buffett buying United Health, and the insurance sector overall saw a bid and it went up. And this one was up 8.63%, settling at just under $17 for the week. So in terms of what did badly, in at number 4, we've got Broadcom. So there was a general sell-off of AI or semiconductor stocks last week, and this one was down 3.73% for the week. In at number 2, Meta, it had a bit of a tough time, down 3.76%, but this is a great business and one I've added to a lot this year, and I am up 27% in the last 3 months or so, and this stock will continue to do well. I don't have any doubts about this. And the worst performer of all last week was Robinhood, down 4.13%, settling at $109. But this one, again, I'm really bullish about this company. It's got a great management team and it executes well. It's got several business models that are very profitable. And for me, this is a solid stock. So yeah, overall, most of my portfolio is green. The 3 or 4 that are down are HIMS at minus 23%. This is one I'm going to hold, and we should see a recovery in the medium term. Let's just hope that they don't get sued by Novo Nordisk, which is a risk factor. Rio Tinto, which is always down again. This is one I will be getting rid of, I believe, when and if it gets down to 0, and I might even sell before that, because this is just perpetually down for so long, too long for me. ASML down 11.17%, but the rest of the stocks doing really well. So yeah, that's it. A bit of a up and down week, but we ended up with excellent news from Jerome Powell. So thank you very much for that, sir. And let's see on the next week how it goes. Thank you very much, and I'll see you on the next one.